Franklin India Income Opportunities Fund. Debt funds, or fixed income funds as they are also known, are considered to be less volatile as compared to equity funds. Typically, debt funds are considered less risky as the underlying investments have limited risk. Most debt funds primarily aim to generate regular income, while some may also aim to generate capital appreciation. They could be seen as alternatives to traditional fixed income savings or investment options like fixed deposits, etc. There are many benefits of investing in debt funds. Some of the key benefits are potential for capital gains along with opportunity for accrual income, potential to outperform inflation over medium to long term, liquidity and tax advantages. Relatively less volatile return profile may offer regular income, transparent and well-regulated, professionally managed. There are two ways in which the debt funds generate returns. First, through interest income from the underlying securities in the fund portfolio. Typically, higher the credit risk, higher is the interest income and vice versa. Credit risk is the probability of the principal and interest being paid on time. In other words, higher credit risk is being compensated by higher interest income. Second, through capital gains, which arises due to change in prices of the underlying securities in the fund portfolio. Typically, prices rise when the interest rates fall and vice versa. This is also known as interest rate risk. Debt funds may be classified on the basis of their indicative investment horizon and their investment strategy. On the basis of indicative investment horizon, debt funds can be classified as liquid and ultra short-term funds. These funds are suitable for investors who have idle money but for a very short-term investment horizon, ranging from a few days to a few months. Then there are short-term and medium-term funds, which invest in short to medium maturity debt securities and are suitable for investors with an investment horizon of 1 to 3 years. And finally, there are long-term funds, which invest in government securities and long maturity corporate bonds, which are best suited for investors with an investment horizon of 3 years and beyond. On the basis of their investment style or strategy, debt funds may be classified as high credit funds. These primarily invest in government securities, corporate bonds and other fixed income instruments with a high credit rating such as AAA or equivalent. The objective is to minimize the credit risk. Managed credit funds. These primarily focus on corporate bonds with credit ratings generally below AAA or equivalent. These funds aim to generate higher interest income by taking higher credit risk. Debt funds can be positioned on the basis of a combination of credit risk and interest rate risk in their portfolios. The chart shows the positioning of various categories of debt funds with respect to credit risk and interest rate risk held in their portfolios. For example, a high credit liquid fund is typically positioned as a fund which carries a low credit risk and a low interest rate risk. Similarly, a managed credit medium-term fund is typically positioned as a fund with a higher credit risk and a higher interest rate risk. Let's look at the key benefits of investing in the Franklin India Income Opportunities Fund. This fund is an open-ended income fund that seeks to provide regular income and capital appreciation by investing in fixed income securities across the yield curve. The fund strives to generate higher yields with relatively lower interest rate risks by primarily concentrating on corporate debt, gilts or securitized debt paper. It focuses on emerging opportunities in the fixed income market and has the flexibility to take concentrated exposure to a particular security class based on macro or micro analysis. Ideal investment horizon. Since Franklin India Income Opportunities Fund is a medium-term debt fund, we recommend an investment horizon of 2 years or more. Every investment you make must ideally be linked to a financial goal, and this goal could be of varied durations depending upon your investment need. This fund could be considered as an investment option if one is seeking diversification, if they are already investing in other asset classes like equity or gold. Regular income if they are aiming for regular cash flow in the post-retirement phase or otherwise. Reasonable capital appreciation. While regular income is the mainstay of the fund, capital appreciation may be incidental in case there is a fall in interest rates over the investment horizon. Who should invest in this fund? Those with a moderate risk appetite, those looking for a stable accrual income from fixed income funds, those who wish to diversify their equity allocation. Investing in this fund could be a good alternative to investing in long-term deposits. Let's take a look at the tax structure. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of receipt of valid redemption request. You could either receive this amount as a direct credit into your registered bank account or as a physical check which you can deposit into your registered bank account. Let's get to know some fun facts of the Franklin India Income Opportunities Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.